Good morning, traders. Today is Tuesday, March 23rd. My name is Charles, and this is the Pirate Traders live stream. Okay, there's the opening bell. Sorry, I'm a bit late getting up and running this morning, but seeing that we're opening inside of yesterday's range and right next to the halfback just increases the odds that the market is going to chop here first thing in the morning. So I think I've probably got an hour or two before I really need to worry. Okay, market internals are opening a little bit bearish, but not terribly so. Let's give them a few minutes to work themselves out. All right. So, what was the market trying to do yesterday? And how good of a job did it do of doing it, right? Well, we felt like, on Friday we put in a good low down here at 38.75, right? It was a good bounce off the daily moving average, the 20 moving average, and it just had good structure, good support, and it brought us right back up into the previous day's range. So we just felt good about this day. Okay, but we were still uncertain because value was lower. Well, yesterday we had a rocket ship market that just went straight up all day long on a ton of excess first thing in the morning. And it's not quite P-shaped. That's what's interesting to me, is that it is elongated out. And by the end of the day, whilst the structure during the day, while it was pushing higher, was really weak. It was poor structure on the way up. Once it was fully formed, it's not that bad. It's kind of an elongated market. So that's either a sign of emotional buying and selling or a sign of new money stepping in and buying, right? The idea being if we'd have just pulled up to here where this node of volume is and then just traded around here the rest of the day, we would have created that P. And the P shape, when we see it in the profile, it tells us that it's more short covering than necessarily new money buying. So the move might not be as reliable to trust. But because it elongated out like this, I really feel like yesterday was a very good day in the market. It was bullish. And it did bring value higher, right? So value higher increases the odds that today the market will either trade sideways or higher. Okay, so that's positive to me. It's a very positive sign. We've also got like 1,000 references above, right? All these little green references that you see here, each one of these acts as a magnet to pull the market. So we've got all these references above and value is higher. All of that's very bullish to me, okay? So yesterday, the market was trying to rocket ship its way up. It got a little bit ahead of itself and had to pull back at the end of the day. But otherwise, it seems very positive. It seems like we've lifted the value of the market. So then you got your overnight activity. Okay, they opened here. They closed here. So overnight activity was net short, but not by that much. We also closed above the prominent POC and the biggest nodes of volume. So again, any counter auction that was going to take place has probably already taken place in the overnight. So yeah, we're just looking at a market where we're opening inside of yesterday's range. And that tells us that we're likely to get chopped first thing in the morning. So what I'm watching, the sort of key levels that I'm watching, I'm looking for support on the downside. Okay, this little node of volume right in here around 39.18, 39.17 area. That's one spot that could become support. There's also the high of Friday, right, which you could say is right now acting as support, right? We pushed just a few ticks below it and then pushed back up. So that could be support. And then I would say the low of the day from yesterday, right? Little double bottom action. So anywhere that I feel like the market is finding support in there, I can start to look for long trades to continue up. on the premise that value is higher. As for the upside, I definitely expect to hit some resistance in this node here from the overnight, which also kind of lines up with our closing price and this little node of volume from the regular trading hours yesterday. But once we blast through that, like I said, there's a lot of magnets up here that want to pull price higher. So let's take it one tick at a time and see what this market does. For now, chop. Um, I can't answer that question, Angelo, because I don't know what the news is. What news is coming out in 30 minutes? Do tell. Good morning, Phoenix. Good morning, News Blip. Asif. Angelo, hit me with them news, but good morning. Deke. Hi, Philip. Kwaku. Good morning. Glad to have you guys here. Jeff, good morning to you, brother. Let's sit and watch this market chop. Phoenix, yeah. That could affect markets. I don't really know why it would though. It's not like he's going to say anything we haven't heard before. He's just going to say the exact same thing he said when he released his Fed notes or whatever, which is like the economy's doing better, things look good, but we're going to keep printing money and buying financial assets. We're in it for the long haul. That's what he's going to say. Steve Z, good morning to you. Good to see you. Shri, good to see you. Daniel, welcome. Fausto, welcome. You haven't missed much. Okay, cool. It's at noon. Yeah, like I said, I don't suspect that's going to cause any major shifts in the market. I think everybody already knows how the Fed feels and what their plan is. One might call it priced in. Okay, we got half back from yesterday, half back from overnight, and half back from today, all lining up. So that's going to be kind of a level that the market will keep hitting over and over again. It's good taper here on the low. I'm not saying this will be the low of the day, but if it is, good taper. Good morning, Dr. Vijay. Good to see you. I know, News Blip. Let's give them some time. Let me earn their like today. I'll give them some wisdom that they didn't have before, and then they'll give me a thumbs up. It seems fair. Jamie, glad to see you. Good morning. Oh, yes. I was thinking about it when I was trying to sleep last night. Deke, I was so disappointed in myself that I missed out on the second half of this move because it's such a simple thing. The day is trending higher. You just go long and you just wait until the cessation of one time framing. We got halfway up and then I was like, oh, we've gone too far, and I got out of my long trade and I missed out on a lot of profits. So yeah, one time framing is a beautiful, beautiful concept to understand. Thank you, Parlin. Appreciate it, brother. Welcome. Good morning, Stan. It's too early for me to do my Kennedy impression, I'm afraid. I haven't had enough coffee in my body. Parlin, yeah, they're 30-minute TPOs. 30 minutes. Yeah, Stan, we'll have a party. Am I 13 away from 500? Is that what's happening right now? The real party will be at 1,000 because YouTube faked me out. I thought I just had to get to 4,000 watch hours before I could monetize, and I had like a big celebration when we got there. And then I found out you have to have 4,000 hours and 1,000 subscribers. So when we get to 1,000, we will actually have a party. Um, Parlin, yeah, I mean it's so essentially if you're new to the channel, what you will find is the way I trade. Unlike most traders out there who trade by a sort of scientific system where they have like a setup, a specific indicator that does a specific thing, and when it does this, they do that, right? They have a very specific like money management strategy. For example, they'll only trade 2% of their portfolio in any one trade, or sorry, only risk 2% of their portfolio in any one trade, or they'll have like an exact distance from their entry. They always put their stop 2 ticks from the entry or whatever, right? So they have a specific thing they look for, and when they see it, they take action. That is trading as a science, right? And all you have to do to get better is just hone the sort of algorithm, so to speak, that you use to take your trades. You just hone your system and you make it better and better over time. Okay, but what I do is an entirely different thing, which I learned from a guy named Jim Dalton, which is the idea of trading as an art instead of a science. There's no one exact way I trade. There's no one exact anything. I literally take the market day by day, trade by trade on a case-by-case basis. And so what my goal is every day when I sit down, 5-10 minutes before the market opens, is to try to come up with 3 scenarios, right? At any given moment, the market could go up, it could go down, or could go sideways. So I start the day every day by asking myself, what's it most likely to do? And then building a narrative for like, okay, if the market was going to go lower, right? First, it'd have to punch through this little volume node, which is like the first set of support, right? Then it's going to have to get below the overnight low. Then we're going to see what happens when it gets to the low of yesterday, right? So I have a plan if the market starts to sell off, no matter what it does. I know what to look for so that when those things happen, I already have a plan of how to trade them and what to do, right? So that is how I start my day every day. And then throughout the day, I'm not sitting around looking for trades. The thought literally has not crossed my mind yet this morning. Do I go long? Do I go short? I haven't even thought about it. Instead, I'm waiting for the market to give me information. So the way Jim Dalton describes it is you let the trades come to you. And it's a little bit confusing concept because you're like, wait a second, but we're traders, right? We were supposed to be sitting here looking for trades. That's how we do our job. But that's what's different about this system and about this idea is instead you just get in the flow of the market. You just understand what the market's doing. You understand who the participants are. What do they normally do? How do they interact with the market, right? And then suddenly you just start to see trades coming to you. So just to make one up, right? Let's say the market pushed higher and it came up here to like the closing price of yesterday, right? Which was at about 39.3250. Okay. So let's say the market pushes its way up here. It hits some resistance, right? And then it pulls back down to the halfback. I might say to myself, oh, look at this. Right? Like maybe let's say we've pulled the POC up here a little bit. I might say like, oh, look, we're below the POC. We're about to hit the halfback. We had some resistance right here, but we'll probably push right back through that the next attempt. So then I'll go, I should go long, and I'll just fucking hit that market buy button. And that's kind of the way I trade. I wait for the market to do something that I recognize, to start playing me a movie I've seen before, and I know how this goes, and then I jump into trades. So as I, jump on throughout the day and I make little comments, I'm basically just saying out loud what's going on in my brain throughout the day. All I'm doing is just analyzing what I see and what I think is happening and then waiting for the trades to present themselves to me. It's 100% right, Jeff. Market-generated information. I don't care what the news is telling me. I don't care what your VWAP is telling me. I don't care about any of that stuff. I just care about what I'm seeing in the chart here, and I'm taking trades based on that. The reason I feel neutral is because I don't know where the market's going to go. So I have the 3 different signs down here, feeling neutral, feeling bullish, and feeling bearish. If it's neutral, I can go long or short, but I normally just don't take trades when I'm feeling neutral. Unless it's a balancing day. That's a slightly different thing, a rotational day. Or if it says I'm feeling bullish, I'll only be taking long trades. And if it's feeling bearish, I'll only be taking short trades. No, I'll take trades any time of day. Today, I think that just because we opened inside of yesterday's range and the overnight inventory was stuck in yesterday's range, I had a feeling we're just going to go up and down for the first hour or two. But I'll take trades. If we'd opened up here, I'd be trading already. Or if we'd opened down here, I'd already be in trades. It just depends, again, on what the market's giving me at any particular moment. And in terms of the question of how often do I take trades, there are days where I take 10 trades and there are days where I take 1 trade. It just depends what the market gives me. All right, little push higher here. Jeff, good reminder. I think Dalton's doing a webinar today. If anybody wants to jump on a free webinar with good old Jimmy D, you can probably just go to jimdaltontrading.com and a thing will pop up for you to sign up. Phoenix. Sorry, bro. No, I love your signals. They're very helpful. It's just I don't use them. The ticks are looking good here. They're looking like they want to start trending higher. But the advancers versus decliners and the breadth are still very weak here. We are below the 20 moving average on the candlesticks for both indices. So whilst we are one time framing higher, I don't necessarily see this as a trend just yet. Let's see what happens when we get up into this resistance. Yeah, that's a great question, Philip. I can't really answer that for you. They start up right when the market opens, right? These are showing us what's happening at the market level on the Nasdaq and the NYSE, like the underlying stocks. So these start to move the instant that the stocks start to move. But what happens is they'll open bearish if the overnight activity pulled price down. So like technically in the SPX, for example, we had like a gap down. It's not a real gap because we're inside of yesterday's range, but we had a gap down. So that's kind of why they open negative. And they do often take, when that happens, they do often take like an hour before they kind of settle themselves out. That is a good nuance to be aware of. Okay, I'll be ready to get bullish here as soon as the NASDAQ pushes above its 20. It's the first resistance I see, so if we poke through that, I will be officially happy to say we're trending higher. Do it, Phoenix. Yes, the VWAP. The VWAP bounce. That's right, Parlin. You got it. So now I'm looking for a long entry. Just because the market is one time framing higher, and we found support at yesterday's high, which we have not retested. It's got good taper. So the narrative is starting to build in my mind. I see this as more bullish than bearish. But even though it's technically trending, I'm not going to switch this to trending just yet, in case the market fails and just kind of grinds for longer. Sometimes it grinds for hours first thing in the morning. So I'm just waiting until I know we've broken out of that grind. And then, yeah, trend. Jamie, good question. No, Jim Dalton does not use the market internals, and he does not use any candlestick charts like I have over here. All he looks at is this. He has two little laptops. One laptop has the profile on it. The other laptop has the order book for options on Thinkorswim, and that's all he does. He just watches the profile trade and then buys and sells options accordingly. No, Jeff, I started taking his courses at the beginning of the pandemic. So never met him. Would love to. One thing I want to do for this YouTube channel, at some point when things settle down, is I want to start making a video series called Traders and Their Systems, and sort of interview traders and have them. What's the show I'm thinking of? It's not Top Chef, but it's like one of those cooking shows, Master Chef maybe, where they it's almost like a documentary about the person's life, where they explain how they got into cooking and what their system for cooking is and all of that. I want to kind of create that for traders, and I'd love to do one with Jim Dalton and Peter Resnicek. They'd be the top two on my list. Yeah, Jamie, that's what Jim Dalton always talks about, is that like most people, what they need is less gizmos and gadgets. They need less things to look at. They need to simplify. That's actually the trick. But I'm not lying to you guys when I say 90% of the day, this is all I'm looking at, what you're seeing here on my screen. I do have another chart on another screen that I take trades on, but this is pretty much it. 100%, Jeff. That is exactly how I feel. And all those gizmos and gadgets, they're all just basically giving you the same information, just with slightly different nuances. Oh, okay, I just noticed that the NASDAQ has punched through its 20. So, despite the confusing internals like yesterday, I trust that this is a trend. So now I'm watching for the cessation of one time framing. I'm watching for the B period to get below the A, or when the C prints in 20 minutes, does it get below the B, and so on and so forth. I love it, Fausto. So tell us now, where's your stop and what's your plan for taking profits? Fausto, I fucking love it. I was desperately hoping you would say you're going to hold it till the end of one time framing. It's a beautiful trade, and I couldn't be happier. Well, you know me, John. I don't like to be put into boxes where I have to get super specific. But yesterday, value was higher, right? So that tells us price wants to either go sideways or higher. So the high of yesterday seems like a very reasonable target. And then once we break it, we got multiple weak references above. I would say we could go pretty high. I think 39.69 is possible. Maybe not quite. Maybe we find some resistance. We got, the POC from this overnight session, the closing price, the POC here. Maybe we find some resistance between like 64 and, or I'd say 62 and 65. But we trade value, not price. Value says higher. You're getting it too, John. I wasn't going to say anything when I saw you say hoping, but I did think the thought. Don't hope, have a plan. All right, so the first, solid resistance is going to be the 20 moving average here on the SPX. Once we push through that, it's likely that that becomes support on the way back down. So a push through this and support on the way back down would have me going long with a lot of volume for a push up to the high from yesterday. Yeah, Parlin. My name is Charles. Probably easier than calling me Coach. I also respond to "Hey Pirate." Um, so that's a simple moving average that I have on my chart, not exponential. But yeah, no, I would watch the market push through the level and then see what happens. So like if I was trading the Nasdaq, I wouldn't have gone long here. I'd be going long now if the market doesn't push back through. Does that make sense? So it's like first the poke through the MA is like the signal that I should be getting long, and then the pull back and finding support, that's like the good entry to do it in terms of risk reward. No, I'm not waiting for the C anymore. This is what I'm watching. I've switched from the one time framing, which I now have confidence in. Even if the B period pulls all the way down into here, I feel like we've built enough volume in this little node that it'll find support down here and it'll keep going higher. So I'm not looking at that anymore. I'm now looking at this moving average. Once again, I'm looking for the market to push through it, then come back down and find support, which is what's happening on the NASDAQ. No, Jeff, I don't see anything particularly weak about the J or the L periods yesterday, other than the poor high that was created in the L period. I guess the low on the J, that was weak, but then the L brought us back and repaired it. But the L low was good. Yeah, so it was just that poor high. This is what weak structure looks like. It's the single prints. I don't trade options a lot. I do sometimes, and when I do, I buy them on the futures contract. I buy options on the MES contract, just because they're the cheapest way to do it, much cheaper than the SPX. But I mostly just trade the futures. Well, we're bumping into the resistance right now. The first resistance, right? It's the 20 moving average. It's this little node of where we spent some time in the overnight, spent some volume yesterday. This whole area right here is the first set of resistance. Then the next thing is the repair of the poor high. So once it's repaired, does the market run out of buyers and start to sell off back into yesterday's range, or does that find support and then we continue higher? So first signpost along the way, the moving average. Second signpost, the high from yesterday. All right, somebody asked earlier how high we're going to go. Algo's targeting 39.60 if the trend continues. That seems perfectly reasonable. Jamie, to answer your question, very cautiously. It's happened a couple times. I think yesterday was one of those days, and there was one last week as well that was like that. And I just trade very cautiously. But it doesn't always happen. Sometimes the market internals are off from the regular market, and that's often on days where the larger market is rotating. You know, like yesterday, the Russell was selling off like crazy at the same time that the Nasdaq was getting bought up. So it was causing the internals to be wonky because there was underlying stocks being bought and sold in both directions. Yet the ES was slowly trudging higher. So sometimes the internals are tricky. I don't use them that much, but they are nice as like a little kind of reassurance. Like, okay, boom, this is the first time I've clicked on them in a while, and now I'm seeing the ticks are falling off here. So maybe this resistance is going to be too strong, and the market can't get through it. Oh no. We're going to get our sensational one time framing. Oh no. Right? But again, value being higher, market goes sideways or higher. Maybe we just balanced today. Maybe this was too much excess. Let's wait and see. Still one time framing higher. And Angelo, 39.16 thinking short. 39.16. Yeah, I mean, this is like your last little bit of support in here from yesterday. Yeah, probably. That would be a good short from there to there. If the market sells its way down, you get the cessation one time framing. It keeps going. But what I would probably more likely do personally is wait to find the support. Wherever you find the support and start trading back up. Once the day goes rotational, I'm generally looking to go long under value for a trade back to the POC. So I wouldn't go short against it. I'd wait for it to find support and then go long. Okay, the NASDAQ passing through the 20 once again, increasing the odds of rotation. Just pulled the POC up a little bit. Getting awfully close to that B period low. All right, that's the cessation of one time framing. So we are going rotational here in the C period. Yeah, Stan, technically, none of this is official trading advice, as I do think you have to have some kind of like license to do that. At least if like people are taking trades like based on what you're saying. I think you have to register or something. But yeah, no, this is just me giving my opinion. Take it or leave it, my friends. All right, so now I'm looking for the market to seem like it's found some support, and then I would go long for a rotation back up to the POC. But this is a pretty vicious candle, so I'll let the market figure itself out first. I'm not in a rush to jump into the trade. Market internals look nasty. Thank you, Stan. Always looking out for me. I'm pretty sure that the disclaimer that's in the, description covers me. Um, would I go long here at 20 and then get out in the value area? No, that's not a trade I would take. The market is still selling off right now. I want to wait for it to find its low first. And then again, I wouldn't target just getting into the value area. I would target the POC. Now, if the market, let's say the market were to find support right here, trade back up, and then I didn't think it was going to make it, then I might decide to exit, down here. But I would plan to wait for it to get up to the POC. Remember, on rotational days, the market will just keep passing through the POC over and over and over again. So as long as you're going long under it and short above it, it's a pretty safe trade. Fill up 39.03. I don't know what you're asking. That's the low from yesterday. Could be support if that's what you're asking. We could make a little double bottom there. Getting below yesterday's range would be very bearish. So if we came down to here and we didn't find support, we'd probably be trending down. Yeah, I can explain what a rotational day means. That's a great question. So there's basically 2 different days that you get in the market. It actually works out to 5 different days, but let's keep it simple. 2 different days, okay? Some of them, actually I got 2 great examples sitting right in front of me. So let's expand out yesterday and then the overnight. Okay. Oh, actually the overnight isn't good. Never mind. But okay, so we'll find a different rotational day. So this is what a trending day looks like, okay? It gets a push higher in the morning, and then the lows are never able to get below the previous time period, right? B couldn't get below A, C before B, so on and so forth. And so the market just keeps grinding its way higher and higher and higher and higher, right? That's a trending day, okay? A balancing day is when the market just, here, this overnight looks good. All right, let me find one in the regular trading hours. Okay, here we go. This was a balancing day. So this is probably what today is going to look like, okay? On a balancing day, the market has sort of a like a bell curve that's turned on its side, right? And then most of the volume will be in the center near the POC, and then it stretches out and gets thinner and thinner on the outsides. And so basically what happens on a balancing day or a rotational day, you got the POC. You can see this was the POC right here. And the market goes, actually the POC earlier in the day was up here, but then it got pulled down. But the point is the market goes above, comes back below, goes above, comes back below, goes above, pulls it down, goes below, above, below, above. You see how it just keeps passing through that POC level? It just keeps going above it and then coming back below it. And it does that all day long. So you could take any trade, you could buy any low here, sell any high, but the safest way to do it is to wait for it to get outside of the blue square, which is the value area. So on a day like today, I would have recognized the rotation in the D period, right? So I would have had no trades until we got down to this J and K period. And I would have been going long here, right? I would have been adding and adding and going along. Probably would have gone long here and then gone long here, went long here. And then I got my rotation back up to the POC, took my profits. I think I remember this actual day, and I think I took my profits early. I think I got weary that we wouldn't make it and took them early. But yeah, that's the trade. So then I said I'd get more complex with it. So you got rotational days and then you got trending days. What normally happens is you don't get one all day long. Normally the day starts off like it did yesterday, or it trended all day yesterday, but normally it trends for like a couple hours, then it goes rotational, or it rotates for a couple hours and then it randomly trends the rest of the day. So, yeah, something to think about. So, for example, I was busy talking to you guys, so I didn't get into it. But if I'd have gone long somewhere in this excess in the C period here, and then we get a rotation back up to the POC, that would have been a great trade. Algo posted a link there that you can use to get financial data. I posted one as well that I've seen Peter Resnicek use. The one I posted, it's pretty simple. It just really only shows you the big important stuff. But to be honest, I haven't looked at that in a long time. I don't really pay attention to it anymore. JL, it's tricky. It's really hard to know. You know what I mean? So the excess is when the prints became single prints, right? So we have good excess on the high. We have 5 TPOs by themselves up there, and looks like 6 down here. So that's considered excess. As soon as we got 2 ticks below the A period low, we had excess. But as far as like how would I know to get in the trade, which I didn't, by the way, I was busy talking and I didn't get into that trade. But how would I have known to get into it? Would have been the cessation one time framing, right? So if the market is starting to trend and then it stops, it almost always, like really, really consistently, I would say 8 out of 10 times, 9 out of 10 times, it just rotates after that, at least for an hour or two. You know what I mean? Before it picks a new direction to travel. So also the fact that we were inside of yesterday's range, we had a ton of excess yesterday that might need balance. All of that tells me today's just rotational. And so it would have been hard to get into the long there because you would have been worried it's going to keep going. But just probability wise, it's more likely to rotate back up to the POC, or at least try to, before another leg down. Yep, taper on the low, good. Taper on the high, not so much. 9,000 contracts, 6,000 contracts, 62. That probably needs to be revisited. But this is good. All right, and then there's the rotation back to the POC right there. So now I got my MO for the day, right? I'm waiting for market to trade above the value area and then going back, or trade below and then going back. Ryan, good to see you, brother. Welcome. Hey, Brian. Glad to have you. Welcome. And Fausto, yeah, I don't know what the exact date is, but you should check on that. It's really important that you get the second one like in the right amount of time. Robert, I have it at I think 1:15. Yeah, so that would be 4:15 Eastern is where 4:30 actually is where I have it. But there's like a 15-minute runoff that doesn't even do anything. It doesn't count. Yeah, Nathan, I don't see it as toppy at all. I see it as rotational. To me, it looks like a market that just needs to balance off some of the excess that we had yesterday. Look at all these single prints, right? Market got a little too excited, got ahead of itself. So now we'll just churn around for a little bit, bounce up and down, and then when we've had enough two-sided trade at this level, we'll move higher or lower. Yeah, John. It's called algorithmic trading. Just program yourself a bot to do whatever you do, and the computer will do the work. Algo Lover suggested a book the other day. Might be worth looking into. I'm saying that as a joke, but also dead serious. Okay, the D period high here is weak because it's one tick from the A period high, and the D period low is weak because it's one tick from the B period low. Okay, so once again, as the market trades its way above the value area, I'm watching this 20 moving average. Is it resistance again? Do we get another push away like we did here? If so, that's a good short. Back to the POC and the weak D period low we've left behind. But if it pushes through, maybe this was all the rotation we needed. So let's wait and see. Okay, so whilst normally I'd be looking to go short here since we're above value on a rotational day, because we poked back above that 20 moving average, and it does have a history of becoming support once it's pushed through, I'm instead going to wait for that. So I might miss a few points here, but I'll wait until the market pulls back down to the 20. If it finds support, I'll go long with it. If it pushes back through, I'll go short for rotation back to the POC. Shri, congratulations. That's a great day. Good for you. Okay, I'm going to switch myself from calling today rotational to just saying I feel bullish because I feel bullish. We pulled back down. That 20 moving average became support, and now we are pushing higher. Also, I was kind of worried about the Russell because it was selling off while the Nasdaq was going up, so I thought maybe that was just rotation. But the Russell is recovering now too. So looks like they're trying to take out that poor high. Shri, I think that's just YouTube shows you if somebody puts at your name, like it just automatically shows it to you in red so you don't miss it. Okay, OMONK. The value area is where 70% of the volume is traded throughout the day. So that's based on the volume, and it's actually like 68 point something, but basically 70% of the volume that trades for the day. Thinking we see the 50 area. Yes, sir. Very doable. Once we repair the poor high, if we can find some support for a push higher, I would think 52, 53 is doable for a repair of this week reference. So C, did I buy it yet or not? I did go long. Right about where we are now, 39.37. I went long. So literally where we are right now. And I was planning on adding to it on a pullback where we retested the 20 moving average. Any break would be my stop out. And my target is the poor high from yesterday. John, why are they selling? They're not selling. The market doesn't go in a straight line. It's got to grind. Algo lover, I cannot believe that you responded to that. That you gave that a response. Do you really love algos that much? But what would be algo lover, since we're here and we're on the subject, if somebody like John wanted to learn to take his strategy and turn it into an algorithm, do you have a suggestion of a educational source he turned to? Andy, I think you're asking when I enter the trade. Is that am I putting in half the size I'm going to take? I don't I don't trade like that. I don't use specific numbers. So I just went in with one contract on the ES, and that's nothing for me, right? One contract on the ES, I could let it sell off all the way down to the low of the value area, and I could handle it emotionally. So I'm looking to add, and I'll kind of like add based on how confident I am. So if when it pulls back down, it builds support, maybe somewhere again around the closing price of yesterday, and then it doesn't go any lower and it pushes back up, I'll be adding and adding and adding. It just depends how much confidence I have. That's part of what I talk about. My trading is an art, not a science. I don't have any specific rules I follow. I just try to go with the flow. Um, on the moving average, I don't have like a specific number. I mean, this is literally how I look at it, what you guys are seeing here. So I can't even see exactly how many ticks above or below a thing is. It's just like visually when I see it poking through, I'll be like, oh, fuck. And then I'll just manually exit my trade. But methinks the poor high will be repaired before the break will happen. Single prints here in the D period need to be backfilled, so the market will need to pull down at least to there. We're also creating a poor high here with the weak E period high, and that often causes a push away first, and then the market comes back to repair. Yeah, this one here, the breath, is like the last indicator to do its job, if that makes sense. So, like, if you look at yesterday, look at how it was going down, most of the day when the price was going up the whole time, right? And it finally started to catch up and pull up, and then at the end of the day, it's shit. So, this is one, I honestly don't even know why I still have this up here. It's just when I originally took this from Peter Resnicek, it was here. But, like, this is the most lagging indicator of them. The ticks are the most important if you're a short-term trader. The ticks developing patterns, like consistent higher lows, that's a bullish sign. Stuff like that. Those are the most immediate changes in the market you see there. Okay, the poor high remains still weak. Jeff, is that the one that's just the S&P? Do you find it to be more reliable? Okay, so as I mentioned, I'm looking to add to my position if the market gets down to this 20 moving average and finds support there. If it breaks, I'll exit because that increases the odds we rotate down to repair this D period low. Just for the record, I love the way Algo Lover does his calls. They're very clear. They're very concise. If you're new, they're easy to follow. But he doesn't tell you where to get in. He just tells you, hey, if the market gets up to here, it's likely to do this. If it goes down to here, it's likely to do this. But it's up to you to make your own decision. You know, that's the best way to help people. Teach them to fish. Don't feed them the fish. All right, and I'm flat. We poked back through that 20 moving average. So now I'm looking for us to rotate back down, and then I would go long again under value here. Andy, I'm not sure what you mean. The D period low being weak just increases the odds slightly that it needs to be repaired, right? That the market has to go get a few ticks below it. But what this is telling me is that the market is still rotational. So I'm back to my reversion to the mean trade. So I'm now back to waiting until we get below value to go long for rotation to the POC. Andy, if you're asking me where I would enter, anywhere below value. But again, nothing is ever set in stone. I'll wait and see how I feel at the moment when the market gets there. But yeah, anything below value, right? Just imagine if you've got when the D period pushed above the B period, the value area was like right here. So imagine if you just went short there and then had the patience to trust the balancing day, the rotational day, right? You would have had to sit through a bit of a squeeze and then it pulled right back to the POC. So it'll do the same thing to the downside. Yeah, Algo Lover. I think that that's a safe assumption to make. Maybe both get taken out. Maybe we have this crazy big range today. Who knows? But to me, the fact that they created a poor high, a tick away from the high of the overnight, just tells me that it's short-term traders. Right? They're just looking at the candlesticks on the futures contract. They're seeing that downtrend and they're just trying to sell it right there. So when the market starts to rotate back up, they'll get weak hands and the market will push higher. It makes sense to me that we just need a balancing day. I mean, like I said, we had tons of excess yesterday. So the market has to spend a bit of time balancing before a push higher or lower. Our value area for today is still inside of yesterday's value. Our trade for today is still within the overnight range and yesterday's range. So the market is just rotating. Look who's being cheeky over here on the Nasdaq. Little bit more strength than the S&P. Looks like its 20 might hold. Yeah, Nasdaq got above yesterday's high. It's a little more bullish, a little stronger. And Fausto, I still haven't finished it. I started. I got like an hour and a half in, but it's going to take me a while to get through that one, I think. It's cool though. I like it. I don't like the 4-3 format. I'm sure he had some sort of artistic reason for doing that, but I don't like it. Maybe because it's similar to like a square box of a comic book strip or something. I don't know. It's weird to me. No, it's the other way around. They shot it in full HD, which is 16 by 9, and then they reframed it to make it 4 by 3. So you're actually missing the sides of the image. And it did that is part of what frustrated me. Like there were a lot of shots where in the original movie like the person would be centered on the frame and then there'd be something like slightly to the right, maybe like a sign or something like that. And for this movie they had to reframe it. So now the sign is on the right and the person is on the left and there's nothing centered. So I actually dislike the 4-3 because they had to take away from the way it was originally shot. But obviously the editing is fucking awesome. The choice of music and the way the story is being told, it's good. I just haven't had time to get through it. Yeah, Algo, I don't see that specific number as being anything special. 3924. I don't know what you're looking at to get that number. But I could see us coming down all the way to like the POC from overnight and just comfortably rotating right back. Stan, we're talking, if you're asking about the movie, we're talking about the new Justice League. Steve Z is absolutely right. John, you can get TradingView is a free platform that you can use, and they've got VWAP on there. You can get, they even have VWAP with the standard deviation bands, so you can see when you're one standard deviation or two standard deviations away. As far as you guys that are kind of debating different levels here, again, I'll just keep reiterating that this is just the market rotating. It hasn't gone anywhere or done anything. We're still rotating inside of the overnight range and inside of the previous day's range. So there's nothing to get excited about and nothing to get scared about in what's happening here. The market's just rotating up and down. Go long below the POC, go short above it. Don't start freaking out that if it gets here, it's going to have a major sell-off. Nope. It can come all the way down to the low of yesterday and still just be rotating. It's no big deal. Value inside of the value area for yesterday. The market just doesn't know where it wants to go. And so short-term traders are just handing each other money back and forth. Yeah, John, you can keep using NinjaTrader. It's just you could have, like wherever you watch this video, just have a second tab open with TradingView and then randomly click over on it every now and then and look at the VWAP indicator. If you wanted to use it, I'm just saying it's free and it's available. Slade is feeling bearish today. You could be right. There's nothing to stop. When a market is rotating, it can pull out of that rotation either direction. You don't know. But again, yesterday value was higher. Wasn't overlapping to higher. It was straight up higher. That's a potent signal that the market wants to go higher. Maybe it did a little bit too fast, but to me, the breakout of balance will be to the upside. The candlesticks look nasty though. Like if you were to do a trend from like the high yesterday down here. Yeah, John, don't worry about it. We all do it. Yellen speaks. That's funny. Yellen speaks. Get it? Yellen. Okay, never mind. I'm sorry. I actually like that analogy, Fausto. There's something to that. The idea of the difference between trading as an art and a science. Like trading as a science, you would need to see a thermometer tell you what the temperature is outside. Trading as an art would be just like opening a window and feeling it. I like that. Pal speaking now. Let me guess. He's like, we gonna print more money, bitches. We're printing money right and left. Fuck your US dollar. Angelo, yes, absolutely. Anytime you start to see the candlesticks just lining up, the bodies the same size, overlapping each other, that's a market you're best to just step back and let it do its thing. And then wait for a better opportunity because it's tricky to try to take trades in here. Hence why I wait for us to get completely below or above the value area. I let it grind if it's just going to grind around inside of here. Stan, nothing wrong with that. Pull out a book, brother. Sit back and read. You don't got to stare at the chart all day. Stan, no, it's definitely not the same thing, man. They're professional financial advisors who charge people money for advice. I'm just an entertainer who's putting on a free show on the internet. Like, it's a totally different category. People can take it or leave it with me, but, you know, it's just a completely different thing. Um, Dalton says he's a 1 to 3 day trader but uses options. Do you know his main strategy with options? Um, Kind of. I mean, I know basically what he does. Um, but no, I couldn't really tell you specifically. He does things where like so like take last night for example, right? He would have recognized that short-term traders were buying above value and he probably would have bought some like put options, right? And so he would have then woken up at like 3 o'clock in the morning, which is a real thing he does, where he trades overnight. He gets up every few hours to check the screens every night. He's just addicted to trading. So he'd get up at like 3 a.m. and he'd like either take the profits on that put that he bought, or he'd like buy a call as like a hedge against that put, right? And so then when the market pushed higher and created a poor high today, he would have like taken profits on the call that he bought as the hedge on the put and still be in the put or whatever. Like it's actually not that complex of a system, but he's just constantly buying like a option that he thinks, you know, is going to expire in like 3 days and then using more shorter term hedges against it with other options. He also allows something I've never done. He allows options to go all the way to expiration and then he like exercises them. So he actually sometimes uses an option to get himself a contract at like a lower price than it currently is. So I would just say take his courses. He talks about it. He could explain it to you better than I could. I'm not listening to that webinar right now. I forgot. News blimp, also an excellent thing. How many financial advisors do you know that break out in song over every random thing? Yeah, I think he always buys whatever the closest expiration is. So it's always like that Friday's expiration. But again, I don't really want to go into any details about his system. I don't remember. He taught a class um, in the full, not the primer, the full class, I forget what it's called. Anyway, the longer class, he teaches a whole class on options and teaches you his option strategy. But like pretty much the only thing I walked away from it with was that like he doesn't trade like you know, broken wing butterflies or anything like that. He just straight up buys a call or a put and then just hedges against it with the opposite. Yeah, it's probably too late now to join his webinar. Um, but if you go to his website, jimdaltontrading.com, there's like a section public webinars. They usually post them like a few hours after the webinar is done. Yeah. So like you could just wait, a couple hours from now after it's done, and they'll post it here on the public webinars tab at jimdaltontrading.com. It's probably better to watch it after the fact because then you can put it in 2x speed. For those of you that have listened to Jim before, you know what I'm talking about. I don't know why you can't access his website, but no, he's just on the website. Access blocked. Where are you at, bro? Are you in some weird place in the world? Are you in Czechoslovakia or something? What's going on? Yeah, Steve, that's what kept me from doing it for a long time. Like I followed Peter Resnicek for years and was reading his pre-market perspective like newsletter every morning, and he'd talk about all these like market profile things, and I just never understood any of it. Like I shit you not, for probably a year and a half, I every day read about it and never had a clue. And I really wanted to take a class with Jim Dalton, and then he started these new classes now, the primers, where it only costs like $300, and I was like, I'm doing it, and that's what got me hooked. So, but I get it. His price point is very, very high. Hence why I'm now doing this on YouTube, because I think traders should be able to learn this stuff without spending thousands of dollars. But that's just me. Yes, Phoenix and Steve, thanks for the heads up. Yeah, there's lots of free stuff. If you just type Jim Dalton's name into YouTube, there's tons of stuff on there. Lots of good stuff. All right, guys. Well, I'm losing my patience with this market. It's gotten a little too boring for me. So I'm gonna go ahead and step away here for a little bit, get some errands done around the house. But I'll still be checking in on the market from time to time. If anything wacky happens, I'll jump in and tell you. Otherwise, just support each other in the chat, answer each other's questions. I appreciate you. Real quick here, while we're watching this balancing day balance, I thought it'd be fun to just scroll back a few hours to earlier today and just play you guys what to expect for today. Balancing day. So this is probably what today is going to look like. Okay. On a balancing day, the market has sort of a like a bell curve that's turned on its side, right? And then most of the volume will be in the center near the POC, and then it stretches out and gets thinner and thinner on the outsides. And so basically what happens on a balancing day or a rotational day, you got the POC. You can see this was the POC right here, and the market goes, actually the POC earlier in the day was up here, but then it got pulled down. But the point is the market goes above, comes back below, goes above, comes back below, goes above, pulls it down, goes below, above, below, above. You see how it just keeps passing through that POC level? It just keeps going above it and then coming back below it. And it does that all day long. So you could take any trade, you could buy any low here, sell any high, but the safest way to do it is to wait for it to get outside of the blue square, which is the value area. So on a day like today, I would have recognized the rotation in the D period, right? Okay, so that's what the rotational day is, and this is how it plays out. This was a perfect example for a learning experience. So the day started out looking like it was going to trend higher, but then in the C period, in the third, half an hour of the day, we had the cessation of one time framing. That was the signal that the day was rotational. Okay, from that point on, it's kind of cheating right now because the value area is kind of shrunk throughout the day. But what would we expect to see on a rotational day? Would be going short above, taking profits at the POC. How many times would that trade have worked? Going long below, taking profits at the POC. Right? So it's a very simple strategy, but it requires discipline. Because even I got faked out this morning, thinking the market was going to trade higher, and then had to be reminded in the E period that we were rotational. So I just thought it was a fun lesson that this is turning out to be a perfect bell-shaped curve. We got to put in some volume. We will. Watch. Right around the POC here. We'll come back up and we'll put some more volume in here. And then we'll have a very beautiful bell-shaped curve. Now, how the day ends up, I don't know. M period will be interesting, won't it? Still got that poor high. Yes, Slade, it's possible. The internals are pretty negative, and the ticks have stayed pretty negative throughout the day. So this one may want to end the day a little lower. Or a liquidation break and an immediate return. It's another option. I feel like there's a liquidation coming. I just sense it. Oh, there it is. Okay, so we're going to treat this as the base of the single prints. So keep in mind, if this market starts to sell off, it breaks past this C low, just created a poor low there. Okay, so if it comes and pushes through, it's going to bring in a liquidation. But we have 5 weak references above. So likely, once the liquidation is over, the market's going to rotate back, in my humble opinion. I'm just going to remind everybody, today's market is rotational. Man, I'm just so close to sensing a liquidation here. But remember, we might just get 2 ticks. We could just get 2 ticks of excess and then a rotation back up. But I feel like we're going to get more. I love hearing you say that, Slade. That's exactly how I would play it. I wouldn't try to short it. I'd look for it to find, after the liquidation starts to rotate back up, I'd look to get in. The long trade could bring you all the way up to the poor high. Oops, I messed up my thing now. Are we there yet? Mom, Dad, are we there yet? Are we at the liquidation break already? Or are we just going to keep making a poor low? Who's buying this poor low? Stop it. Let it happen. Dude, whoever is buying this poor low is about to get eaten alive. I don't know what they're thinking. Low is still poor. We need one more tick of excess. Okay, there we go. So that's a good low for excess. Now let's see what kind of liquidation that brings in. Okay. What are we looking at, guys? We need to learn to control our emotions during these liquidation breaks. Let's ask ourselves what's happening. How thin is the volume? How emotional? How quickly is the market falling apart? Why is it falling so quickly? Because the people that are selling here are panicking out of their long trades, or they're FOMOing into a short. They got a million weak references above them. Boop, 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 boop. Value is above them. POC is above them. So they're selling out of emotion, not market-generated information. No, I wouldn't short this. You go long against a liquidation. You try to catch the knife, basically. Yeah, 3908 is solid. 3904 is solid. Let's see how hard they push it. Okay, the single prints left behind is the L period prints here. Those are what are likely to need to be refilled no matter what. That's just one more week reference. So there's essentially now pour high, 4 week references, and single prints, all of which are magnets to pull the price upward. But we've created another pour low right at the overnight low. So likely we're going to need to get a little bit more excess, a little more downside. Yeah, RK, 975. Yeah, that's great. Just pucker your butthole, buddy. Let them push it as far as they're going to push it. No, have a stop. I'm just kidding. Trade however you trade. Put a stop loss in. Okay, that's one tick of excess. Let's see if we can get another. Okay, good low in terms of excess now. No. Keep going. My order hasn't filled. God damn it. All right, I'm just going to go ahead and get in for 2 market right now. I was going to try to get in at the low for yesterday. God, that was a fast one. Okay. So now expect to fill the single prints here in the K period. Do we find resistance at the base of those single prints, or do we continue up into value? I don't know, man. I think that was your low. It's perfect excess, perfect taper. Let's see. Let's see if it brings in some new sellers here, but I think we're going to the base of the single prints. Jeff, don't okay taper me. That's great. 3,000, 2,000, 2,000, 1,000, 82. I would have liked that to have been 100. It's like 20 contracts off. For an emotional sell-off, that's pretty good. Thank you, sir. That's the name of the game. You make money in your plays, I make money in my plays, and hopefully we just take it from the other people who don't know what they're doing. I'm telling you, I feel terrible for whoever was buying that poor low. It came down here and it was just grinding. I bet you they were some of the panic sellers. Yeah, I think trying to understand why that low was there was me. I'm the guy who made that low there because I had my limit order right here. I had it 50 cents above this low. And because I missed it, as soon as it started to pull back, I went in market, you know? And that's, I'm not the only one. A lot of people were like, fuck, we're going to miss it. And they jumped on, and that gave it that little push back. Jeez, look at the ticks on the NASDAQ. It went to negative 1,500. All right, well, I'm going to stop out of this trade. So we're still in a liquidation. We're just bringing in some new sellers. Okay, I just went in market. I'm long again. I'll hold if they push down to try to get below yesterday's low. Because I really think these single prints are going to be a magnet. Only 800 contracts here. That needs to be backfilled. I mean, sorry, 600 contracts. Mangesh. Yeah, I do my best. My system, my strategy, so to speak, is still in development. I'm still trying to master how to trade the market. But I am getting pretty good because of what I learned from Jim Dalton at reading the market and knowing what it's doing. But I'm still trying to get that formula for how I make the most money out of it. It's a process. There's sound. I'm just not saying anything. Obviously, liquidation break. Couldn't repair. Single prints. Brought in new sellers. I'm looking for them to get a few ticks below yesterday's low and then the rotation back. But I just don't like these internals. They're very intimidating. On the question of the software, I use a software called Window Trader. The version I use is Window Trader Lite. It's like $130 a month, and then you got to pay for the data as well. There's lots of others. If you just Google it, you'll see there's lots of places that have it. It's tough to make it look exactly like this, but all you really need is the profile. You just need to stretch out the data, into columns so that you can see it like this, see the shape. And there's lots of software that does that. Just search for market profile. Okay, got a couple ticks excess below yesterday's low. Is that support? Let's find out. Guess not. Next support, the prominent POC from the 21st. Okay, we got lots of single prints here in the L period. Volume's getting thin. Only 800 contracts here. Well, admittingly, that was a painful knife to try to catch. Could that be our low? Could be. That's not great taper. Yeah, unfortunately, the more time we spend down here, the less likely it becomes a liquidation break, and the more likely it becomes a spike down at the end of the day. Um, yep, we now got value overlapping to lower. That snuck up on us. All right, I think that the liquidation is actually the market pushing itself lower on purpose. So we're going to call this a base of spike instead of single prints. Thank you for subscribing, Andy. Welcome. Was this news driven? Does anybody know if there was something that happened? Yeah, the M period. See, the problem now is time. Okay, so you have to understand how the mind of the panicked trader works. Is that like the failure to fill the single prints on the way back up from the initial liquidation that brought in new sellers, right? People who were trying to FOMO into the short. It brought in new sellers. That pushed us down to the low of yesterday. And then that caused more panic to start to come in again. So now we're in this place where the more time that we spend down here, the more people get scared. People who are buying in here, hoping for the rotation up, are going to now start exiting too. So in the end, a liquidation break strengthens the market because it takes sellers out of the market. But I don't know where we find support. We may have to go to the low of 321. So an M period that pushes all the way back up would be pretty awesome to see. And it's not impossible, but that's a big move. All right, 1 minute to the M period. Seems like the more time we spend down here, the more sellers we bring in. Start your prediction engines. Now, what do we think is going to happen in the M period? Where are we going to end up today? Hit me with your predictions in the chat. All right, M period leaving 2 sets of single prints. 2 sets of single prints, increasing the odds that the market needs to rotate back up. We have one prediction to back above 39.10. Okay. Well within range. 39.19, again, getting up to the base of the spike here. Or actually back up into value almost. 39.05. Okay, just a small rotation up, but not fully filling the single prints. North Korea acting up. Uh-oh. What, are they just making threats? OSIF sees 39.10. 39.16. 3880. Wow. Am Gosley, you are bearish, my friend. That would suck to just go straight down to there from here. Ugh. Could be. Okay, my prediction is we rotate back up. We fill at least the single prints of the L period here, and then probably finish somewhere between there and the base of the spike. But that is kind of just a random guess. I don't know what this market's going to do. Something is bringing in sellers. More and more of them. Oh, you mean if we rotate? So your question is like if we rotate back up and we're back inside of the range where the overnight was trading last night? Yeah, I expect more balance. The good news is a liquidation break. If we get that, if we get a rotation back up, a liquidation break actually takes sellers out of the market. So that is very positive for the market. But yeah, I mean, if you have two rotational days, 2 days with overlapping value, rotational overnight, rotational day, and then you open inside that same range again the next day, you're just going to get more rotation. So let's see. The first target is filling these single prints and then seeing if we can get up to the base of this spike. Then we'll find out what's going to happen here at this level. Okay, we've got a poor low here in the M period. Only one tick from the L period low. Need at least one more tick to the downside. Also, bad taper, 2,000 contracts to 70. Fired a missile. Stevesy. That's not good. But again, to me, if that is what's causing this, I don't know, maybe. Doesn't seem like it would. But if that's what's causing this, then we definitely will rotate right back up. Yeah, I completely support you in that. This is a very dangerous knife catching scenario, just because it probably is news driven, and so who knows if that brings in more sellers. Okay, good taper on the low here. 5,000, 4,000, 1,300. I don't think the selling will be over until we see it in the ticks. You need to see a big green tick that gets above these highs here. That'll be the first candle that pulls us back up. The low is holding for now. Dude, you guys, did I literally just say it? Ugh. I literally just said it. Okay. Oh, nope, nope. Yes, no, yes, no. Man, this is a tough one to call, but I do think we want to fill these single prints in the next 19 minutes. What are we seeing here, people? Are the ticks going to go positive? All right, now is the time for the rotation up. Now is it finally going to happen? Yeah, the tick did it in the end. This is the tick that broke the pattern. Much easier to see here in the NASDAQ and in the price in the NASDAQ as well. So now the question becomes, do the sellers that pushed us down here, do they start to panic out of their trades, giving us the speed to come back up? Or do new sellers see it as an opportunity to pile on? Looks like it's going to be the former. Look at that. Look at those ticks. Yeah, the target is the single prints. First, we fill these single prints in the L period, and then either new sellers come in and push us down again, or we work our way back up and then fill the ones left over from the K period. Same story. Then does that bring in sellers who push us back down, or do we rotate back up to the POC? I don't feel like that's as likely anymore. I do still feel like I said at the beginning of the M period, somewhere between these single prints and the base of the spike here. Wow. Second failure to fill the single prints brings in more sellers. Rinse and repeat. Can you say downside continuation? All right, Jeff, we'll see you tomorrow. So again, that's still the same low from the M period. So in terms of the two-way auction, right? Tried to fill the single prints, failed, brought in new sellers, but they couldn't make a new low. That failed as well. So now we'll take another pass at the push higher. This is how we do it, rotating around. There you go, guys. You got some singing. I got it in. Yeah, Jeff, we appreciate you as well. Okay, lots of thin volume up in here, right? Needs to be backfilled. 3,000 contracts. Scott, I don't think so. Not on NinjaTrader. I know you can with Sierra charts. But if there's anyone that knows about profile on NinjaTrader, let us know. I really should start a list. People keep always telling me, like, this one has it, that one has it, and I never write it down. Philip, if we finish below the overnight, do we want to buy? It's tough to say, my friend. I would like to fill some more single prints here before I get definitive. But yeah, I mean, to me, this is just this. I know it's a crazy one, but this is just a liquidation. So if the market is able to rotate back up into this range, I should presume we just continue rotating in this range. But until we're back, until these single prints are filled, and then we see what happens at these, it's just too early to say. Oh, there you go. You got to buy whatever the more expensive license is for NinjaTrader. All right, guys. Well, it does look like we're going to end the day with this spike and all these single prints. So what does that tell us, right? At the closing bell, what's the lesson that we take away from this? Well, the single prints tell us that something changed in the market. This wasn't just emotion. Something new is happening now. So that's to be noted, some sort of change in the market. But it also gives us this spike range. So from the base of the spike here at 39.16 to the low here at 38.90.50. This area here is what we now call the spike. So tomorrow we have spike rules in play when the market opens. Spike rules basically say if the market opens inside the spike, it's neutral. If neutral to bearish, but more basically neutral. But if that we open up above the base of the spike here, that's very positive. And if we open up below the base of the spike, that's very negative. That's very bearish, right? So I know you're like, oh, who cares? That's such a simple thing. No, I mean, it's a really valuable tool. Like if you open above, you can feel confident the market's going to push higher. If you open below, you can be definitely confident it's going to push lower. And then if you open inside, you just don't know. It'll probably either balance or it'll work its way one way or the other. So spike rules will be in play. 1 minute to close. There it is. The closing bell rings. The spike remains. Let's see what happens tomorrow morning. Thank you guys very, very much for joining me. It's been a pleasure. I shall see you here in the AM. Thank you.